Chinese stocks have always been a gray area when it comes to investing for investors. Some investors are cautious, some are skeptical, and some investors will never put a penny into Chinese stocks. This could be because of many different reasons out there, but I believe the main reason that this happens, the main reason people don't choose to invest in Chinese stocks, is because of the lack of safety that they offer. Since it's a different market and a different economy across the world, in a country that we don't know everything about, investors don't really feel safe putting their money into that. And thus it is scary, I'm not gonna lie, to put 5, 10, 15, 20% or even more of your portfolio into a single Chinese stock that you may not know everything about. On top of this, a lot of Chinese companies that are listed in the US are ADRs, which are essentially holdings. I'm not really going to get into that today, but if you do want to see a video on that, make sure to comment that down below. But what I do want to talk about today is an option for those of you out there that want some exposure to Chinese tech stocks specifically, but you don't really want to invest in any of them individually. So I'm going to give you an option today. You may or may not like this, but it's definitely out there for you to take advantage of. Let's go. Hey guys, welcome back to another video. Hit that subscribe button down below if you want to join the community. If you're an avid investor in the stock market, this is the place for you. So personally, getting into this, for me, Chinese companies are actually an excellent investment because the potential upside that they offer actually outweighs the perceived risk in these stocks for me personally. Even with the recent trade war tensions and the fact that a lot of these Chinese stocks have been getting hit a lot recently, I am still bullish on Chinese companies, tech companies specifically, and if you've been following the channel, you know exactly what companies I absolutely love. Now there's been a lot of news, of course, recently that China has entered a bear market. A lot of stocks are in a bear market there. And one thing that we keep preaching and teaching on this channel is that a bear market isn't necessarily a bad thing. That's exactly when you get discounts on companies. That's when you get companies on sale. And now, since China is technically in a bear market because of this trade war tension, it's an excellent opportunity to pick up tons of shares in solid companies. But say you're not comfortable or interested in really investing in a single company out there in China, but you do want some exposure to that space to take advantage of any upside that there is potentially coming in the next few months or years. Well, luckily there is an ETF out there that actually is aimed towards Chinese tech stocks and will allow you to take advantage of this rise if it does happen. So this fund specifically is managed by Global X and goes under the ticker symbol QQQC and is essentially known as the Chinese Tech ETF. So if you're familiar with the QQQ, which is the NASDAQ equivalent tech ETF in the US over here, this is pretty much the Chinese version of that. The goal, of course, of this fund is to give investors an option to invest in the Chinese economy and the Chinese market, especially with Chinese tech stocks, which offer the most amount of growth potential right now. And it also reduces their risk because there are, as you'll see in a second, a lot of holdings that kind of balance out your portfolio so you're not overexposed to just a handful of Chinese companies. So this fund actually holds over 45 different Chinese tech stocks. So you're going to get a wide range and a wide exposure of different tech companies in China. Some of the largest companies that are part of this ETF include Baidu, Tencent, Sina, Baozun, YY, Momo, etc. These names are some of the most popular stocks out there in the stock market here in the US, and a lot of people invest in these companies individually already. So by owning this ETF, you get exposure to all of these companies and more. Now, of course, the drawback here is that there is a management fee because this is an ETF that is managed by a fund, and they will be charging you a 0.65% management fee to own this in your portfolio. So in my opinion, of course, this is a very high fee for an ETF. I personally look for ETFs that are somewhere around 0.05% or lower if I do want to hold an ETF. So of course you are paying a pretty large premium here for this ETF if you choose to invest in Chinese companies going this route. For some people this might be worth it because it's almost like you're paying an insurance to hold these companies and have it managed by a fund so that it reduces your overall risk and you're not overexposed to a single company or just a handful of companies out there in China. Now, one thing of course that stood out to me, which I have to talk about, is that there was no JD.com or Alibaba listed in this ETF. Maybe the reason is because these two companies are more e-commerce companies as opposed to pure tech plays, which is why they're not listed. But in my opinion, they should be listed because a lot of them do have a good hold on technology in China. Alibaba, for example, has their Alibaba Cloud, which is a growing service that they offer in China. So in my opinion, these two should be included, and these are two of the largest growth companies in China. So I think that this is actually a pretty big drawback of this ETF. They should definitely look into including these two companies in that ETF as well, because this will appeal to even more investors. Alibaba is most likely the most popular Chinese stock in terms of long-term investors, or people who are actually serious about looking for a Chinese stock to hold for the long term. Alibaba usually tops the list in that aspect. But that being said, maybe as a new investor in Chinese stocks, this isn't really a deal breaker for you. And if that's the case, then the QQC might be a perfect option for you to add to your portfolio to give you a little bit more exposure outside of the United States and into China. So for me personally, I will continue doing what I'm doing, and that's investing in individual Chinese companies that I believe in. I don't think that this ETF is actually meant for someone like me who wants to go and handpick stocks and research into these Chinese stocks and actually make decisions based on that research, based on what I think that's going to happen with the company and all of that stuff. This ETF is pretty much aimed for someone who just wants exposure to diversify themselves outside of the US and just get a little bit of that tech Chinese growth potential in their portfolio. So I hope you enjoyed this quick video here, guys. Make sure to hit that subscribe button down below and drop a huge like on this video as well. Don't forget to invest positively, and I'll see you in the next one.